Welcome back, you guys, to Andy the Banker Show. And in the last 7 days, holy moly, we had so much to catch up upon. You have the bond markets going crazy. You have the trade war even escalating with China, right? And now you also have the bank stocks reporting their earnings. I want to talk a little bit about that. And then I also want to talk about these three companies, CrowdStrike, Nvidia, and Palantir, because their valuation is a little bit crazy. All right, specifically the Palantir. Let's get it started, you guys, with the bond market. All right. The bond market has been so volatile the last couple of days. And when you look at the 10-year treasuries, it is bouncing off like 50 basis points easy, right? In almost a single day can go up 50 basis points. Now, you might be wondering, Andy, isn't that a good thing? The bond market is going up. The yields are going up and up and up. Well, not technically. If you want to put your money in bonds, sure, the yields are pretty attractive, right? However, for the economy as a whole, I don't consider the bond market going up in yield a good thing for the stock market, because I consider the bond market as actually a competition for the stock market. And let me explain why. The stock market is made up of many different people. It's not just made up of 20 something year olds, right? You have 30-year-olds, you have 40-year-olds, you have 50-year-olds, and even 60, 70-year-olds, right? People that are in their retirement age. Now, those people that's later in their investing career that are close to retirement age, if they see a yield where the 10-year treasury, the 10-year notes are giving you a 5% yield, to them, I don't blame them if they go ahead and take that money out of the stock market and put it into the bond market, because those are some great rates, right? Now, even in my particular case, if at a certain point, if let's say I see the bond market at 15%, even I might be tempted to put my money into the bond market. So it just kind of depends on how much the yields are. Essentially, because of that, the higher the bond markets keep on going in yield, it kind of puts like an imaginary cap on the stock market, because the people that would have put their money into the stock market, well, they're now putting that exact money that they would have put into the stock market into the bond market. You lose liquidity in public companies and in the private market. Because of that, the the country does need to go ahead and stabilize the bond market. So that's one reason, right? In that it's essentially competition for the stock market. Stock investors should not be liking bond yields going higher, because people will be putting that money in the bonds. The second reason has to do with our national debt. We have $36 trillion in national debt, and some of that money is going to be refinanced. Now, the President Donald Trump, he wants to refinance those debts as low as possible, because we as the country are borrowing those money to fund special projects. Now, if the 10-year treasuries keep on going higher and higher, that means that the country will have to refinance these bonds at a higher yield, which would not be so good. Which means that majority of the money that we would be making in tax revenue would have to go towards the interest payment. That in itself alone has more implications. Now, why is everybody talking about the bond market? What's so important, right? Is the bond market sometimes go up, sometimes go down. Why is it special this time? It's because this is one of the very few times, and I can attest to this myself as well, where in the past, when we have times of crisis, people tend to flock to risk-free assets. People tend to go to US bonds, right? People go to the 10-year treasury or treasury bills, things like that. But in this particular case, you actually do not see that happening. You see the gold market at all-time highs. You see that people are buying into gold rather than the US Treasury. Because of this, it makes the government worry about potentially losing the United States reserve currency status, because this reserve currency status is such a huge advantage to the US that if we were to lose it, we would not have the same amount of liquidity. Because there is so much demand for the US dollar, we are able to borrow so much money at super low rates that other countries are not able to do the same. So if we lose that reserve currency status as the United States of America, we'll have to essentially pay higher rates if we do need to fund projects in the future, such as, for example, let's say you need to build your roads. You got to go ahead and issue bonds, borrow money for that. You got to build a port. You got to make special projects. That's where that's where bonds come into play. So when I saw the bond market going crazy, and literally the next day on a Saturday, the President Donald Trump announced tariff reliefs, I was like, okay, this is important because even the president realizes that the bond market can actually collapse the economy, because if the bond market starts going so high, it makes borrowing like just a pain in the butt. Now, the next thing I did want to share about with you guys was the topic of the bank earnings. All right. Banks like JP Morgan, the Bank of Americas, they have reported their earnings, and it was pretty, I want to say in general, they were pretty darn good. They beat their earnings expectation. What stood out for me specifically was that these companies, the banks, they're making money off the investment side, right? Their wealth management side, their wealth advisory side. So in that particular field, it makes me more bullish on my Robinhood, because Robinhood is about to report their earnings on April 30th. And if the other banks are doing great in their investment side, I'm thinking in my head, okay, Robinhood is literally their bread and butter is the investment side, right? They help people with self-directed investing. And as a result, I have this, it gives me a good sense of hope that Robinhood can do well as well during their earning report on April 30th. And that's something that I'm pretty excited for, and I'm looking forward to it. Now, in terms of the other companies, I get a lot of questions from you guys about Nvidia, about Palantir, about CrowdStrike. All right. One of the things that I want to bring to your attention is, let's talk about CrowdStrike first. All right. I don't know if you guys knew this, but the company is trading at negative 4,000 PE ratio, right? Negative 4,000. I don't know if you guys knew that, because what I hear online is like people are telling investors online. I see it on the media outlets, like buy CrowdStrike because it's a reoccurring team. You can't cut cybersecurity, and in a way, I'm like, okay, I see that point. You can't cut cybersecurity, but you take a look at the company. I believe CrowdStrike is at 90 something billion market cap, but the company is in a net loss. That's an issue for me, you guys, right? That valuation is, the math is not mathing for me, especially during the stock market that we have right now, where if you're not making money, a lot of companies are getting punished, right? So when I see a negative 4,000 PE ratio CrowdStrike, that worries me a bit. All right, that makes me kind of like stop a moment and not buy into the company just yet. So as a result, I'm gonna be holding off on CrowdStrike. I don't plan on touching the company anytime soon. I will keep a close attention to CrowdStrike earnings report. And then the other company I wanted to pay attention to was Nvidia. All right. And so Nvidia currently trades at 20 times revenue multiple. Now, which that in line is not too crazy. However, one thing that stood out for me for Nvidia was their 45% net profit margins. Like when I take a look at the net profit margins of Nvidia, like holy moly, like the company has higher net profit margins than Google itself. They make a lot of profits on the products that they sell. It's like great for them. I also look at the valuation though. All right. The valuation is that the company is at a 2.7 trillion dollars, but it is making, I believe, less than 140 billion dollars. So that to me, it is a little bit steep of a valuation at this current moment in time. And in my opinion, it's not too crazy, but it is a little bit steep from the companies that I see in the market right now, right? You have companies like the Microsoft of the world, the Googles of the world, all companies that I invest in, by the way, that I see as better buying opportunities for myself. And as a result, I am buying into the lower P multiple companies at this moment in time. Now, when I was researching CrowdStrike and Nvidia, I thought those two companies were crazy because they were trading at 20 times revenue multiples. But you know what's the one company I don't understand? It is Palantir, you guys. Because Palantir is trading at 80 times revenue multiple. Now, the company is at almost a 500 PE ratio, right? It's just super super high. I've never seen a company like Palantir. I ask other investors that do invest in Palantir, what is the reasoning behind it? Right. What is causing people to invest in Palantir? Because when I look at the financials, the financials doesn't make sense to me, you guys. At first I thought, is it maybe trading at a high valuation because of the net profit margins? Do they just make very high profit margins on the products they sell? But it's like less than 10, you guys, less than 10%. Right? Google has higher net profit margins than them. Palantir almost has the same net profit margins as Tesla itself. In my mind, it's not that. In my head, I'm thinking, what is causing Palantir to be trading at such a high valuation? Do other investors know exactly what Palantir does? And then when I asked them, they share with me some general information, such as that Palantir is assisting the government with AI. The Palantir is assisting government with AI in the military. But what do they specifically do? And when I talk with specific investors, they have a hard time exactly pinpointing the exact product that Palantir does for the government that other companies cannot do. But I would definitely love to hear your thoughts on Palantir. Do you believe that it deserves to trade at an 80 times revenue multiple? Do you think it deserves to be trading at a 500 PE ratio? Is it that good of a company, you guys, that if you were to buy in right now at 500 times PE ratio, almost a 500 times PE ratio, that you would still make money? Because the company is almost priced of perfection, in my opinion, and it's just crazy. I sometimes the math doesn't make sense, and you just sometimes can be confused about a stock. And I'll be completely honest, when it comes to Palantir, I don't know why it is so high up at this moment in time. And with that, you guys, thank you so much. I'll see you guys on the next episode. Bye bye.